Hi, everybody. Thanks very much for joining our London Open update. Just a quick one. I'm going to wrap this up at 8, about just after 8:15 today. I have an interview that I need to get to that was hastily arranged. So many apologies for that. But hopefully we can get started. Let's get started right now. Just bear with me one moment while I pull up my chart. Let's not kid anyone. A lot of people are excited or very much looking at what the euro is doing, of course. Who wouldn't be? We've got a really big couple of days coming up for Europe. Hopefully now you can see my euro-dollar chart, this 15-minute chart. And just to say that, obviously we do have, a couple of huge days for Europe coming up. There is a debt auctions tomorrow for Spain and Italy, a larger than expected debt auction for Italy on Friday as well. Someone in Rome must think that someone wants to buy European or Italian bonds because they've just increased that. Added to that, we've also got the ECB meeting. Now let's get a look at the technicals. Now this is the short-term chart. I would say that just looking at this chart, I like a very, very short-term, longer position. I believe that today we're going to be probably stuck in ranges, so we're in a range trading atmosphere. Added to that, I think today's not going to be the big day. I think there's so much uncertainty for tomorrow. We do believe that the auctions will go ahead, but we think there's a risk that they could have higher yields. Added to that, there is a risk, of course, that Mario Draghi, even though he won't necessarily mention QE for the ECB, what he may do instead is say that he will sound incredibly dovish, say that he's going to offer as much support as possible to the banking sector, this, that, and the other. So we think that the euro is certainly a sell on rallies, but in the very near term, it may actually start to rise. I would draw your attention as well, just on the short term, to the very, very short term MACD there. As you can see, looks like it's trending slightly higher, just all on a very smooth, steady as you go kind of way. That would tally with what we've seen in euro trading over the Asia session. Obviously, the Asia session is particularly kind of landlocked, if you like, or particularly range bound for recent months. And that's because usually Asian traders are waiting until London opens for things to kick off. So when we start the London session, things tend to be quite calm, quite placid. Euro-dollar trading between 127.30 on the downside, about 127.70 or 80, 75.80 on the upside today. And so really we're waiting for Europe and seeing what the markets are doing and what the sentiment is. However, above kind of 127.30, we think we could potentially target 127.90 ahead of 128.15, that type of area. Now, those of you who were trading yesterday, apologies, I don't know what's wrong with my voice, will know that yesterday's high was 128.18. So that really to us is the selling point for euro-dollar. Investors are not happy to go buying euros above 128. In fact, that seems to be the real take profit level. So we really are in this very tight ranges, and we think that will continue. So what we may see, we're currently testing 127.50. We may see it back above this kind of 127.70 level here. Just looking at it from kind of a much more kind of longer term level. Charts aren't really telling us too much. We potentially might be getting a little bit, yeah, it's kind of more of a consolidation pattern. That's what we're kind of seeing here. And that really kind of tallies. So this is the hourly chart I'm showing you now. And that really kind of tallies with this range trading, this bit of uncertainty. We haven't had too much economic data, remember, so there haven't been too many drivers. We haven't had anything too interesting for Europe's politicians. And considering a lot of these moves, I'll just go on to the daily chart as well, a lot of these moves have been on the back of headline risk. The fact that we haven't had any does suggest something. But just a pattern that I would point out to you, this is the daily chart in euro-dollar, which goes all the way back for the last 12 months. Back to since kind of November, since that high above kind of just about 142 when we saw the euro start to get sold off. One thing that myself and my colleagues pointed out is that it hasn't really, yes, there have been periods of consolidation, but we've just seen this kind of real continuation of lower highs. We had 142, we had kind of 138.50 there, we had 135, we then had kind of like 132. And right now it looks like kind of maybe 128 is the low, and then back below there we'd probably target 125. So obviously there are some interim supports then between now and then. There is certainly 126.66. It's the 14-month low that we got to on Friday at one point. Did bounce back from that though. We just seem to be in this pattern, and right now I can't see anything that's going to break the pattern of kind of big drops or lurches downwards in euro dollar, and then periods, probably fairly significant periods, of kind of trading sideways and then big lurches down lower. But one thing I would point out to you as well, if you just look at this point here. Now this point dates back to the beginning of December. Now why is that important? That's because that was the last ECB meeting. That took place on the 8th of December 2011. That was really the game changer for the euro. As you can see, it tried to rally a little bit before it. When Draghi came out and said that they essentially would provide all this liquidity to banks, yet he didn't quite say QE3, more kind of as the market took it QE3 by the back door, then we saw that kind of really sharp drop. And it hasn't really stopped below 130 either. So really what Draghi says tomorrow is going to be incredibly important and is really going to determine euro dollar and whether or not we kind of do break this pattern. We don't think we will, as I said. Obviously 126.60 on the downside, 126. But then we are also going to be looking, of course, at we'll also be then looking, of course, at 125, really key number. Now, someone said, what are my moving average numbers? And my moving average numbers are the same across all my charts. The red line is 200, yellow line, which I know you can't see very well, so red line 200, yellow line 100, green line here 55 and 21. I use those moving averages. They're kind of industry standard pretty much. The 55 and the 21 are a little bit more specific, but they're kind of, I think the way that you tend to follow or tend to use moving averages are by following somebody that you trust and like in the market. So that's what I did. So that's why I use those. So yes, on the daily chart, as you can see, it is below its moving averages, which just really suggests the sharp decline that it has had. But then you could argue that, the fact that euro dollar has done very well for most of 2011 and hadn't actually come under any extreme selling pressure, even though the debt prices had deteriorated to quite an extent, that the moment we saw something that was dollar positive, for example, the pickup in economic data, the fact that the Fed doesn't look like it's going to do QE3 anymore, and then we would start seeing this real sharp decline in euro, and that's exactly what we've seen. Now let's take a look at a few of the other crosses. Just bear with me for one moment. I am quite interested as well in I'm going to look at euro. I'm also going to look at dollar yen. Now the reason why is because it's kind of important for euro yen, which is they're my two kind of favorite crosses. So euro yen and euro dollar at the moment, we think they could kind of be under attack in the next couple of days, what with all this risk that's out there. So dollar yen, as you can see here, kind of getting a bit sticky around that 70 level, as you would expect. As you can see, this is the chart. Over the past year, we're getting very close to, it's incredibly weak within its long-term range. Let's just take a look at it on a more shorter-term chart. In fact, I'll start with a 30-minute. Really trading sideways. As I said, this is all stickiness here. And then on the 15-minute chart, again, it's not really doing too much. It's not too interesting. Tomorrow as well, let's not forget that we have some U.S. economic data out there. So we do have a U.S. Retail sales and then consumer confidence on Friday. This will all be incredibly important for the yen. Sorry, apologies for that. But we do think the fact that it has cracked below 77 is key. Take a look back at the hourly again. The fact that it has broken below this kind of cluster of hourly moving averages here, which came in at kind of between about 76.95 and about 76.98, so very, very tight, but kind of around that 76.90 to 77 mark. They were kind of key. They had acted certainly as kind of key. Now, certainly that was a kind of a key support level at 77 zone, and now it's acting as now it's kind of testing there, testing that support, and below here potentially we could see back to 76.70, 76.60 before we see kind of a more longer term moved down to about 76.55. We certainly think, let me just draw a couple of lines here. So as you can see, kind of looking there, we would certainly look kind of at that as a resting zone, potentially here as a resting zone as well. So there is a lot of support on the way down, and the one thing we would talk about dollar yen is that any further weakness kind of below the 77 mark could be quite sticky. And the reason why we think that is because of intervention risk by the Bank of Japan. They haven't really done anything, but if we were to see some kind of really sharp move lower, so like a move quickly down to 76 or a move straight through 76.50, that could really get the authorities in Japan acting and intervening directly in the market. So instead we think, obviously this 76.80 zone, 76.60. So this kind of dollar yen trade is really probably for the more kind of patient scalper, if you like, someone not looking for too much in the terms of points, but does obviously see kind of or can certainly appreciate these type of support levels down here, because you really do have to appreciate those support levels when it comes to dollar yen at these stretched levels. Now, one thing I would point out, certainly on the hourly, the chart doesn't look oversold in any way. Let's take a look at the more shorter term, see what that's telling us. Turning over a little bit, so again, this kind of downward momentum below 77 or below 76.90, but again, certainly doesn't look oversold. So there could be a bit more, certainly in the near term, a bit more weakness in dollar yen that could potentially see us down to that 76.50 zone. So let's then take a look, just a couple of bits. I'll tell you what, I'll take a look at all the majors together. So I'll look at pound as well. Pound has been really interesting. A lot of people have liked it kind of above that 154.50, 60 mark. If I just look at the hourly chart first. So as you can see, kind of 154 acted as really good support recently, certainly since the start of this year. So we've seen kind of it did dip below there, but it didn't stay long. And again, it kind of held here. So this kind of level here, this 154 level, is acting as very good support. 154, kind of 40, 50. So this kind of cluster here of hourly SMAs is proving to be a little bit sticky, but then 154.50 is acting as good resistance. So we like long positions above there, certainly in the very, very short term, targeting kind of this 155.10 mark. Sorry about that. 155.10, which is our 200-hour moving average, and that's the red line on the chart in front of you. As you can see, it looks like the pink line in the MACD could just about be turning over. We're not quite there yet. As I said, there is some congestion here with the 21-hour and the 100-hour moving average kind of getting in the way of further gains above 154.65 to 70. But above there could be kind of about another, 30 to 40 pips of upside before we start to really see. And this is what I mean in the range trading conditions. I'm not happy right now with saying, I want to see, I'm a long-term kind of pound bull. I'm not. And there is a Bank of England meeting tomorrow. The last kind of few weeks, those of you who have joined these webinars will know that, I've kind of been on a day-to-day basis almost, or a couple of days basis. I do tend to think that, the market's really focusing in on big events. So they're focusing on big political events, big economic events. Tomorrow's payrolls will be, tomorrow's retail sales from the US will be really important, as will confidence data, to see if the momentum in US economic data is carrying on. So today, in those days that lead up to those meetings, obviously then we've got the debt auctions and the ECB and Bank of England meeting tomorrow as well. So gearing up to be a very kind of busy end to the week. But in the interim, so like, for example, like a day like today, as we wait for these events, they're so difficult to predict that it's very difficult for the market to actually price that type of stuff in before they actually happen, if you like. You can do it a lot. You can certainly do it a lot more for equities, because equities will tend to kind of move on guidance, especially now that we've got these Q4 results coming out. But it's very difficult, certainly for forex charts, certainly for FX, and also for kind of some of the commodities. Largely because we don't know where things are going to. So I would point out again, we seem to be range trading. Now I'm going to take a quick look at Euro Yen and then at gold. Before I have to go, folks, sorry about that. So Euro Yen's an interesting one. As you can see, Euro Yen, again, it's, yes, it's kind of pointing up. Yes, it's kind of moving a bit That was the daily chart. So the daily chart in euro yen still looks very, very weak. Looks very similar to euro dollar. Obviously, it's had much sharper decline as the yen has really been the kind of safe haven of choice for most of last year. And we think kind of this, it did manage to climb back above 98 kind of 98 above 98.20. If we were to get above kind of 98.50, then we could see it back above to 98.55. But we think that it's taken its time so much. Now let's take a look back at the more shorter term. So as you can see here, there's a potential that we may see to the top of this range, but we think 98.50 will thwart it. Could potentially get to 98.35, 40 before kind of the bears come in. And just prepare themselves, really. It's all about hedging yourself ahead of these very uncertain events like the bond auctions. Added to that also the ECB meeting. And we think, overall along with kind of those negotiations on Greek debt are actually euro negative. So essentially kind of here, 98.50 may actually thwart euro yen. But above there, 98.85. So we're kind of looking, whereabouts are we looking here? Kind of around this level here could be the next level of resistance. But certainly on the downside for euro yen, support certainly starts with kind of 97.80, 97.50, then 97 kind of 30-ish, 28 level, and a break below there obviously to 96.50. So, but at the moment it seems like it's very much kind of range trading between potentially 98.50 if it can make it, and 97.50 on the downside. I am going to take a quick look at gold before we go. So as you can see with gold, the one thing I'd point out about gold is that it has broken above its 200-day moving average at 1630, currently at 1645. The next level to note in gold is 1675, so that's next resistance. So that's what I'd like to show you. Now, someone's just asked me about Aussie dollar. What do I think about Aussie dollar? Aussie dollar is looking fairly good. Momentum is fairly positive. Obviously, today we've seen it make fairly hard work of 103.50. But if it can break above there, so if it's kind of at the high of its Asian range today, then potentially we could see to kind of 103.87 and then kind of 104.20-ish, which is the key resistance level. But do watch out. We have got inflation data coming out tomorrow from China, so that's overnight our time. I think it's 1:30 a.m. GMT, and that's going to be really pivotal for the Aussie, which has shown for obvious reasons, is very sensitive to what comes out of China. That inflation data is expected to moderate to 4% in December. That is a good thing that's good for the Aussie, because it does suggest that there'll be room then for the Chinese authorities to actually increase policy accommodation. So do watch out for that. That's going to be kind of a risk. That could potentially keep gains trapped below 103.50. But then again, if we do see kind of weaker inflation data, some positive noises coming out of China that they might concentrate more on growth and loosen monetary policy, that would be good news for the Aussie, and we could see kind of retrade or a move back towards that 104 level. Okay, everybody, sorry I have to cut this short today, but thank you very much for joining. Please do join me on Friday, and again, as I said, watch out for those event risks tomorrow. Kind of trade your ranges. Certainly look at your support and resistance. This is when kind of the basics of technical analysis really come in. It's all about support and resistance right now. So thanks very much, everybody. Bye bye.